How about Tesla specifically, which is now off 37% from the recent highs, is down another more than 5% today. Everyone wants to know what your new price target is, Kathy, because the last time you gave that price target, it seemed crazy to a lot of people, and then not so much when Tesla actually rocketed 700%. So where are you now on where that stock goes?
The price targets have gone up considerably. The price targets have gone up considerably. The price targets have gone up considerably.
Hey, I'm Stephen and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. And what else is there to say? ARK Invest confirming that their Tesla stock price targets have gone up considerably. Kathy Wood of ARK Invest recently spoke to CNBC, sharing the fact that they are more bullish on Tesla now than they have been in the past, including on autonomy. As we just heard, their price targets have increased on Tesla stock, and Kathy Wood says she's hoping ARK Invest's new valuation model and price targets on Tesla stock will drop in the next week or two. So let's get into the video. But first, hey guys, if you'd like to help out the channel and get up to 2 free stocks, check out the link in the description to Webull. If you open a new account, you'll get 1 free stock valued up to $250 just for opening an account. And if you fund your account with $100, you'll get a second free stock valued up to $1,600. Unless you don't like free stocks, that is. And if you're in Australia, the UK or New Zealand, you can get a free stock with Stake also using the link in the description. Let's get back to it.
How about Tesla specifically, which is now off 37% from the recent highs, is down another more than 5% today. Everyone wants to know what your new price target is, Kathy, because the last time you gave that price target, it seemed crazy to a lot of people, and then not so much when Tesla actually rocketed 700%. So where are you now on where that stock goes?
Well, we're about to publish, I'm hoping it's within a week or two, our new forecasts. Our confidence in Tesla has gone up for a number of reasons. One, it didn't lose share of the electric vehicle market when all of the traditional luxury brand names started bringing their own electric vehicles to market. Now, we expect it will lose share, but our expectation was that its share would go from 17% at the end of 2018 down to 11% as more electric vehicles were coming out. Instead, what happened? Its share moved up to more than 20% and roughly 80% in the US market, 80% of electric vehicles.
All right, we've got to take some time to let this one sink in. ARK Invest, the biggest Tesla bulls on Wall Street by miles, no contest, the biggest Tesla bulls on Wall Street. ARK Invest were too conservative in their projections for how much market share Tesla would maintain in the future. Think about that for a second. ARK Invest.
So that's the first source of confidence, market share up, not down. The second is autonomous. We believe that Elon Musk, who over the weekend tweeted out that he would offer, or Tesla would offer, full service driving to anyone who wanted it, saw an incredible burst in demand. So for him to be able to do that suggests to us that he's going to be able to show us the way to autonomous much faster than most analysts and investors expect. So the probability we have put on Tesla really winning the lion's share of the autonomous taxi network market in the United States also has gone up. So you might imagine the price targets have gone up considerably.
So considerably is a fairly strong term. I wonder what their new price targets will be. In fact, let me know in the comments below. What do you think the golden goose scenario will be, their new Tesla stock price target, keeping in mind that the prior golden goose scenario pre-split adjusts to $4,400 per share, today split adjusted. What do you think the new golden goose scenario is going to be, considering that Kathy Wood just said their Tesla stock price targets have, that's right, increased considerably?
I have a broader question on Tesla in a moment, Kathy, but quickly first, on self-driving technology, are you saying all of the revelations and news from the company in the last couple of weeks has only improved your outlook on the company? Because some analysts, based on the response to Freedom of Information request, were underwhelmed by the outlining that they're more like level 2 in terms of that technology than perhaps some expected the announcement to be.
It gets me every time when anybody suggests that Tesla's behind the race, they're not in the lead in terms of solving fully autonomous vehicles. Now, I do understand if somebody takes a cursory look, they have no fundamental understanding of how neural networks work, how fundamentally important data is, etc. They may see a vehicle that can do more than Tesla. In certain situations, it's allowed to do certain things that right now Tesla's software isn't doing, because Tesla's taking a slightly different approach. In the short term, pre-mapping an area using LiDAR, etc., somewhere like Phoenix, Arizona, for example, you have vehicles already driving autonomously in a tiny little sandpit, but if they go outside that, they're a death machine on wheels. They'll kill people. So it can look at first glance like, oh damn, Cruise or Waymo is further ahead than Tesla is. Wow, Tesla sucks. But that's just a massive tell that the person reacting like that has no concept whatsoever of how this problem will actually be solved, okay? When we're talking about having a vehicle in a geofenced area that's pre-mapped and relies on LiDAR, that isn't a fully self-driving vehicle. That's basically a robot taking a certain route around the place that's pre-programmed, pre-mapped, and it already knows where all the obstacles are, and it's using LiDAR just to make sure something hasn't changed, okay? This is completely different to Tesla's approach, which is to solve computer vision, literally using a camera-based system tied to a neural network, just like human beings use to drive vehicles. Good clue there on one path to solve autonomy. Tesla is trying to build a ground-up solution that solves computer vision and recognition. This means that Tesla won't be reliant on LiDAR or pre-mapped areas. You could pick up a Tesla that's fully self-driving, say anywhere in North America, drop it anywhere else, and it will drive you safely to your destination. That is Tesla's end goal. In the short term, because they're not reliant on cheats, training wheels, methods to look further ahead than they are, Tesla looks like they're further behind, but you have to understand the underlying technology and how this race will ultimately be won. Tesla has an unassailable lead of data. This is how they will solve full self-driving. There will be other companies that launch autonomous service in tiny geofenced areas all over the world before Tesla begins to deploy its generalized full self-driving solution. But once Tesla gets to a level where their fully autonomous software is safe enough to be better than humans in every condition that it can encounter, it is game over. No one is catching them. All of the companies like Cruise, Waymo, etc. are just toast. They'll never be able to scale and expand their networks at the pace Tesla can, because once Tesla solves autonomy in a region, they can press a button, suddenly the robotaxi fleet awakens.
Well, we believe that Tesla has been doing this differently, staging the movement into autonomous differently from other companies like Waymo and Cruise Automation. And so I can understand why there's some confusion. We think that their strategy is not market by market ultimately, but national. And so I think there's a misunderstanding about how they're going to market.
My broad question on Tesla, Kathy, and you have been so right on this company and so many other companies that you know, I sit here and think, who am I to even bother asking this question? But I think it is fair to compare things today to Amazon, to people who were right to be bullish on Amazon as it pulled back in 1999 for a couple of years because of where it is now. But it did take almost a decade for it to get back above its pre-pullback 99 peak. During a period of time when it continued to take market share, continued to grow revenues, continued to grow profit, but there was a 9-year period where the share price was underwater. Is that not possible to apply to Tesla going here, even if you're absolutely right that the company's top and bottom lines continue to grow, continue to take share?
Well, I know the Amazon story well because I was living, eating, and breathing it the entire time. So what we saw in the tech and telecom bust was the recognition that we were not ready for prime time for a lot of the companies evolving at that time. And so there were a wave of bankruptcies, and the psychology became, well, many people thought that the internet was a figment of Wall Street's imagination and that no one would make any money off of it, and Amazon included. And the time period you're talking about, Wilfred, was when Amazon basically was saying, look, we will be as close to cash flow neutral as possible, but we are going to turn every revenue dollar we possibly can back into investing. That's how they won. But they did not show profitability, not any substantial profitability, but often losses for many, many years. They just believed that if they invested aggressively at that time, that they would win the lion's share of the online retail market. And that was absolutely right. I think Tesla has already passed through that phase of its life. It did invest aggressively, and it has on 4 metrics, it is leading the charge, so to speak.
I just want to expand a little bit on what Cathie Wood said there. Tesla is well past the point now, today, of needing to raise money, of not being a self-sustaining business. This means that the faster that Tesla scales, the larger they get, the more profits they have to scale even faster, which will bring in even more profits, which brings in even more scale, blah, 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 blah. This is an insane feedback loop. Tesla is now at a stage where they're a self-sustaining business. They are highly profitable. Tesla will have surplus cash now every quarter, no matter how fast they are scaling. They're just a money printing machine, and it's only going to get better from here as the software floodgates open, more full self-driving revenue. Then once autonomy is solved, there's going to be so much more software revenue coming through from infotainment, entertainment, productivity, communication, etc. within Teslas themselves. So in other words, the rocket has already reached orbit. It's just now, how far into outer space does this thing go?
Battery technology costs lower than anyone else's out there and will remain lower. Artificial intelligence chip, it designed its own. No one else has designed its own chip. This is analogous to Apple in the day. Cellular companies, Nokia, Ericsson, and Motorola didn't see the future. Apple did, and yet it couldn't get Qualcomm or Intel to move quickly enough. It had to design its own chip. And of course, now Apple basically accounts for the lion's share of all the profits from smartphones in the world. We think this is going to happen also with Tesla. Maybe not worldwide, because we know China wants its own champion. But that AI chip that Tesla designed, our analyst said, was 4 years ahead of where NVIDIA was at the time. And this was a couple of years ago. They have more data collected than any other company by orders of magnitude, not just by any other company, but by all other companies out there, because the largest pool of data with the highest quality is going to win in the AI game. They have the largest pool of data. And finally, until very recently, Tesla was the only automobile manufacturer able to improve performance of its cars with over-the-air software updates. I got my Model 3 in 2018. Never had a problem except a nail in the wheel, which they couldn't correct over the air, of course. Never a problem. So what they've done is extraordinary, and I think this is their market to lose. I think they're in a very, very different place also. We're not in the tech and telecom bust. We are 20 years later. All of the seeds for what is happening now were planted back then. Now they're coming to fruition.
So just recapping those 4 points from Cathie Wood in terms of Tesla's lead. Tesla's battery technology in a league of its own, miles ahead, literally. Tesla's AI chip, literally years ahead of everyone else out in the marketplace. Cutting edge technology developed in-house at Tesla because nobody else could do it. No one was moving it fast. They had to take matters into their own hands. Tesla's unassailable data lead, literally billions of miles of real-world data more than anyone else. In fact, more than the entire rest of the industry combined. No one is catching Tesla on this point. It's just a matter of time until they have solved autonomy because of their data lead, their data engine, the way that they're trained in their neural networks, and Tesla's over-the-air software updates, which until recently, literally no other automaker, using the term loosely there of course, had even successfully completed. As in, nobody could even do an over-the-air update until recently. Not just the fact that nobody could do anything meaningful over the air, performance upgrades, enabling rear heated seat stuff that Tesla's done. Nobody could do any over-the-air updates at all. And Cathie Wood also confirming that ARK Invest confidence in Tesla has continued to grow, and they believe that they're even closer to solving fully autonomous vehicles, and also dropping a huge bombshell, letting us know that within a week or two, ARK Invest's new research, valuation model, and Tesla stock price targets will be dropping. I cannot wait for that. And don't forget to let me know your guess for ARK Invest's new golden goose scenario price target for Tesla stock in the comments below. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. And don't forget, if you'd like to help out the channel and get up to 2 free stocks, check out the link in the description to Webull. If you open a new account, you'll get 1 free stock valued up to $250 just for opening an account. And if you fund your account with $100, you'll get a second free stock valued up to $1,600. And if you're in Australia, the UK, or New Zealand, you can get a free stock with Stake also using the link in the description. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.